The holiday is over. Good morning and welcome to Business Morning. I'm Chimeze Obi Iwagu.
And I'm Ini John Mekwa. Thank you so much for joining us and welcome back to work. Well, the International Monetary Fund will today release the full World Economic Outlook report with updated global and regional growth and projections. The analytical chapters of the World Economic Outlook find that compared to the global financial crisis, the COVID-19 recession had 3 times the impact on global output in half the time. So the report answers questions such as how great will the economic damage in years to come, what might be the lasting impact of the pandemic-induced recession on employment, how can policymakers help the workforce cope with the pandemic's harsh and unequal impact. Speaking at the customary curtain raiser speech ahead of the 2021 spring meetings, which started yesterday virtually, IMF Managing Director Kristalina Georgieva said that the recovery has given room for an upward revision, stating that there will be a multi-speed recovery powered by the United States and China.
Accelerated recovery brings good news overall, but it may also create some less desired outcomes, the law of unintended consequences. For example, strong growth in the US can benefit many countries through increased trade. We expect inflation to remain contained, but faster US recovery could cause a rapid rise in interest rates, which could lead to a sharper tightening of financial conditions and significant capital outflows from emerging and developing economies.
Kristalina Georgieva, IMF Managing Director. In the meantime, World Bank President David Malpass says the group of 20 gathering of finance ministers from the world's largest economies this week is likely to extend debt service suspension initiative for poorer nations until the end of the year. According to him, the extension of the reprieve in debt service payments by many of the world's poorer nations will probably be the final. The G20's debt service suspension initiative, which took effect last May, delivered $5 billion in relief for more than 40 countries in 2020. The G20 last October extended the program, originally set to expire in December 2020, through June, and agreed to consider a further 6-month extension later. Mr. Malpass maintains that the World Bank has made good progress in helping countries through the pandemic, but much work remains to be done to achieve sustainable and broad-based economic growth without harming the environment or leaving hundreds of millions of families in poverty.
And back here in Nigeria, as part of its corporate effort to curb the spread of COVID-19, the NLLG Ship Management Limited has embarked on an awareness and sensitization campaign aimed at sensitizing government officials and regulatory authorities, some of which are port health officials, immigration, customs, and other ship clearing agencies in the COVID-19 prevention and recovery protocols in terminal operations and on-board vessel. The awareness campaign was flagged off last week at the NNLG subsidiary Stop Gap Fuel Limited in Rivers State. It's the flag off of the Nigeria Liquefied Natural Gas Limited NLLG Ship Management Limited campaign and sensitization on COVID-19 awareness. Present for the event are the NNLG subsidiary Stop Gap Fuel Limited in Iwofe, Rivers State, as well as port health officials, immigration, customs, and other ship clearing agencies in terminal operations. The exercise is aimed at providing clarity on the protocols and procedures to engender full compliance by all parties involved in clearing activities at the terminal to check the transmission of the virus while enhancing operational effectiveness.
Our engagement today with the Stuttgart terminal is really about discussing the operational elements of COVID prevention as well as recovery. So the engagement today was really to come together, sit down with our partners in the terminal, the government agencies that are responsible for clearing vessels, and look at the issues of COVID and ensure that we all get to the same page in terms of understanding what we need to do to continue to stay safe and continue to operate in a very efficient and safe manner.
In addition to the sensitization exercise, steps are also being taken to achieve desired results.
Where people are going to come on board, if they have to come on board, is to ensure that they go through the isolation protocol, the testing protocol, so that we are absolutely certain that before they go on board those vessels, that they are COVID-free. Now, all of these looked together is really about ensuring that people, both on the vessel and at shore, remain safe, keep themselves safe, and do not spread the virus, which can be very disruptive from an operational point of view.
The company says the sensitization campaign, which also features medical insights on COVID-19 by the NLLG corporate medical team, will also be carried out in Lagos on the 7th and 8th of April.
And as part of efforts aimed at finding a permanent solution to the problems of truck congestion around Apapa and its environs, the Nigerian Ports Authority in February announced the commencement of the electronic truck call-up system. This is designed for the management of truck management movement and access to and from the Lagos Ports Complex and the Tinkan Island Ports Apapa. All trucks doing business at the ports will be required to park at the approved truck parks until they are called up into the port. But how far has this gone towards achieving its aims? The Director General, Lagos Chamber of Commerce and Industry, Dr. Muda Yusuf, joins us now to talk about this. Good morning, Dr. Yusuf. Good to see you.
Thank you.
And welcome back to work.
Thank
I
you.
hope you enjoyed your holiday anyway.
I did, thank you.
Right, the e-call-up system was introduced just barely 1 month ago. I'm sure you've been liaising with your members who operate in the ports and all that. What are they saying to you?
Well, first, let's appreciate the fact that the application of technology to the issues of managing traffic at Apapa and the environs is a very good initiative. So it's something that we commend. And secondly, because it's a new thing, it's an innovation. It also will take some time to mature and to take proper shape in terms of achieving the desired objectives. But generally, from the point of view of promoting efficiency, better coordination in terms of decongesting the traffic, some measure of success has been achieved, but there are concerns. Okay. There are concerns around the effect of this on exporters. There are issues around the role of the terminal operators. There are issues around the fact that the fuel tankers are not yet part of the call-up system. There are issues around infrastructure works. I'm talking of road construction between Tinkan, Mile 2 axis corridor, which is also contributing to the problems. So there are all sorts of issues. There are issues of even the technical capacity of those who are managing the e-call-up platform. But just as I said, it's just 1 month or so into this. It's a learning process, but it's something that is worth pursuing to the very logical end, because that is the way to go. Because if you look at the kind of chaos that we had a few months ago compared to what we have now, you can see that there has been some improvement. But certainly, there's still a whole lot of work that needs to be done.
So are there talks going on? I mean, these issues you have brought, like you said, it's new, so some of the issues will crop up as we go. So are there talks to, adjust the system to accommodate some of these issues?
Well, there have been some useful engagements. The Lagos State government has a task force that is also working in collaboration with stakeholders. There has been a lot of engagement at the level of the State Ministry of Transportation, with the task force, with the NPA, and all of that. There's also been some engagement with the exporters, because part of the constituency that have been complaining a lot about this e-call-up is those who are exporting.
Yeah, at a point there was this suspension of exports for about 3 weeks.
Yes, there was this suspension of exports, and that is also part of the lapses or a reflection of the inadequacy in terms of engagement and consultation. Because the announcement was so sudden. And many of them, because of the nature of export contracts, many of them had entered into contracts. Some of them have loaded their trucks. Some of them have already even moved into the ports. Suddenly they heard that there has been this suspension for 3 weeks. So that actually created a lot of problems for exporters. It affected contractual obligations between them. It also posed some risk to the quality of the export cargo, because some of them also have very tight timelines during which these things have to be delivered at their destination.
Yeah, you talked about the tanker drivers. What specifically are the issues with these tanker drivers and the tank farm? And of course, looking at those even in the logistics sector, what is their own perspective?
Well, the challenge with the tanker drivers, first, is the fact that they are not incorporated into the e-column. Because the e-column, which is an initiative of the NPA and some other stakeholders, was focused more on trucks that are bound for the ports. The tankers are not going to the ports, at least almost 90% of them. They are going to the tank farms. And when we talk about the issue of congestion, they are also part of the problem.
Yeah, because they have to line up.
And they also line up to go to the tank farms. So there has to be a way to incorporate them, either into the current column or there is a separate column system, so that we don't have them lining up on the roads or on the bridges leading to the tank farms. Secondly, I think it is also very appropriate and necessary to compel the tank farms to also have holding bays. Because we cannot turn the roads to areas where all the tankers from all over the country will be staying. If anybody has a tank farm, it is also necessary that you have a holding bay, so that as you are prepared to load the tank or the tankers, you call on them, maybe in batches of 5, 6, 10, or whatever, so that you don't have a situation where, in addition to the problem that we had with containers going to the ports and all of that, we also have this problem of tankers. So there has to be some engagement, and I'm sure that is also going on. But this has to be done very fast, because the tanker drivers, they can easily, by virtue of the strategic position that they occupy in the economy, it's very easy for them to intimidate the authorities and say we are going on strike and all of that. And because of that, they get away with so many things. I think in order to bring sanity to this entire system, they have to be incorporated one way or the other into the e-column, so that they will also be called up as and when necessary to come and do their loading at the tank farms. And the owners of the tank farms have a major responsibility to make sure that that happens by having adequate holding bays for the tankers.
So are there people who are against this system in any way, that this system doesn't pay?
Before now, the crisis around Apapa, Tinkan, all this traffic crisis, was a lot of people are benefiting from it. And from what we heard, quite a lot of money were made by a lot of people. At that time, you go there, you see sheds of people who have permanently settled there because it was big business. So naturally, those who are the major beneficiaries of that chaos or that crisis will not be happy with this. So they are also a source of risk to the success of the e-column. But if we have effectiveness in terms of implementation, effectiveness in terms of the transparency of the process, and the coordination, because in all of this, for these things to work, you must also inspire the confidence of all the stakeholders.
Yeah, that brings us to the activities of the task force,
yes,
in Lagos. What's your view on how they have been able to carry out their functions, perhaps?
Well, they are doing their best, especially in the area of enforcement. Before coming to the studio, I had some discussions with them, and with some of the members of the task force and the NPA. They are doing their best, but they are also expressing frustration. First, from those who are posing a risk and those who are original beneficiaries of the crisis, who don't want these things to work. Second, also about the cooperation of some of these truck drivers. Some of them are also reluctant to go to the designated truck parks. Because if you go there, again, there are issues of charges. That is part of the things that the stakeholders also need to engage on. Because if the charges are too prohibitive, because you can be in a truck park, a transit park you can be there for 5 days, you can be there for 10 days. And for each day you are there, there is an amount you pay. So if the charges are becoming too much, if the whole process is now being turned into another revenue-generating arrangement for some people, then it could pose a risk to the success of the e-column. So the charges need to be moderate. The truck parks also need to be adequate so that this thing can be successful. Because, for instance, the exporters, part of the things they complain about is the adequacy of the truck parks. They also complain about the challenges of having to have 2 levels of parking. There's the transit park, and they have only 2 of that. Transit park, there's the pre-gate park. The transit park is where they go and park. After some days, they'll be called up to the pre-gate. The pre-gate park is one that is closer to the port. So there again, they spend some days before they now
So
finally
who runs these parks? Whose pockets does the money go into?
Well, they have an arrangement. I think there's some PPP arrangement, the details of which I don't know. But as part of the whole arrangement, there are some of these facilities that are provided by the NPA. There are some of these processes that are also done in conjunction with the private sector.
Now, what about the shipping companies and the terminal operators? What is their role?
The shipping companies, the major problem the shipping companies have been creating has to do with the issue of the empty containers. Before now, it was a major nuisance when you see a very long queue of trucks heading to the ports to go and drop empty containers. And they could be there for days. First, the importers are losing money because the moment you take your goods with a container, there's a container deposit. Most often, they lose that deposit because the containers are not returned before the time when the deposit will lapse. And this is not the fault or the making of the importers. So it's part of the challenges that importers are facing. So now, under this policy, I think there has been some impact in terms of enforcing that the shipping companies should have holding bays for the empty containers. So that these containers don't go straight to the ports. They are dropped at the holding bay, and when their vessels come, they can now move these empty containers through barges to load into those vessels.
So which authority should coordinate? I mean, we have a lot of people involved. We have the tanker drivers, we have the tank farm owners, we have the shipping companies, we have the terminal operators, we have the task force. Who should be a coordinating authority that can stand and look for how to, make it more inclusive and more friendly to every party that is involved?
Yes, that's a good point because it's a very complicated process because of the number of stakeholders involved. So in terms of coordination, the coordination also has to be collective. The Nigerian Shippers Council is a major regulator in the maritime sector. It's playing a big role. The Lagos State Task Force is also key, and the NPA. So it has to be a tripartite thing, but inclusiveness is key because there are so many stakeholders, and if you don't inspire the confidence of the stakeholders, there could be a backlash and be back to square one.
Yeah, aside from that, what other way forward do you think would serve as a lasting solution to this issue?
Well, the lasting solution to this is to ensure that there is commitment on the part of the government and there is transparency in the whole process. Because when you are managing this kind of system, where there's a lot of pressure, sometimes a lot of bottlenecks, the corruption risk is very high. So unless those who are coordinating it are really on top of this situation to ensure that the processes are transparent, they are adequate, and they inspire confidence. If they are able to do that, then we can see something that is much more sustainable in terms of the e-column.
All right. Thank you very much, Dr. Yusuf, for sharing your
much.
thoughts here. We do appreciate your time.
Thank you very much.
Well, Dr. Muda Yusuf is the Director General, Lagos Chamber of Commerce and Industry. Commodities Market Update is next. Just stay with us. Starting off this segment on the global oil markets, as prices were higher in the afternoon of Asia trading hours, with international benchmark Brent crude futures up 0.84% to $62.67 per barrel. U.S. crude futures gained 1.02% to $59.25 per barrel. Investors are focused on indirect talks between Iran and the United States as part of negotiations to revive the 2015 nuclear deal. And there is an assumption there is going to be a flood of Iranian oil in the market. Analysts expect U.S. sanctions, including restrictions on Iranian oil sales, to be lifted only after these talks are completed and Iran returns to compliance. Iran has already boosted exports to China despite the sanctions. Oil has recovered from historic lows last year with the support of record OPEC plus cuts, most of which will remain after July. Demand is expected to recover further in the second half, while a slow vaccine rollout and return to lockdown in parts of Europe have weighed. Figures on Friday showed the U.S. economy created the most jobs in 7 months in March. And joining us now for the commodities market update is Bolande Abaje, one of the research analysts with Financial Derivatives Company. Good morning, Bolande. Good to see you. Good morning. Thank you for joining us. All right. Well, on Friday, or last week rather, when OPEC Plus decided to relax their production cut, we saw oil price, go down. But this morning, we've seen the prices come up again because of U.S.-Iran's nuclear talk. Now, is this trend what we're likely going to see in the oil markets in the medium term?
Yes, so Iran is increasing its oil supply despite the sanctions that are already in place. And although we don't expect the relationship between the U.S. and Iran to be as tough as it was with the previous administration, and we do expect that Iran's supply would increase in the future, in the medium to long term. But also, more importantly, the fact that OPEC Plus is easing on their output cuts has detrimental impact on the supply.
Oh, okay. I guess we have to correct something there. We're talking about that.
Well, the decision from OPEC Plus, we're also looking at how this will affect, especially the Nigerian market, the decision to increase production and how it will affect prices. And
there are also other issues of the U.S. dollar index. And in fact, the job data also came out. That was on Friday, and it's actually looking good. The unemployment rate in the U.S. has also
more jobs were created,
and I guess all of these are going to have some kind of impact on the commodities space there. Well, Bolande, you were talking about, of course, the Iran talk and all of that, and then I just mentioned U.S. dollar index this morning was actually rising, and on Friday, U.S. was reporting a great job data there, unemploment rate. Unemployment rate down.
Yes.
And of course the services index, going up. So, are we going to see all of these have some impact on the commodities market space, particularly oil?
Yes. Just because when you seeing a recovery in the U.S. economy, then it's great on the side of the demand that would build up as a result. It seems like everything is moving in the right direction, and even as fast as one had expected, just because there's direction when it comes to this new Biden administration. And once you have increased stimulus within the economy, then the positive impact of that would be, increase in jobs. Most businesses feel secure to employ more people, and there's, more increased output within their sectors. But on the other hand, you're looking at also shale producers, oil prices trading, at a very nice level, and it's more or less calls to question whether they would, continue to boost output, which is negative on the part of oil.
How do we expect this to affect Nigeria? I mean, Nigeria's main export is oil. How will it affect foreign exchange earnings?
It will definitely affect us, just because, currently, I think our production has currently increased, and with the easing of the output costs, we expect to increase our, level of production, hopefully to the levels that we had seen, previous years, 1.8 million barrels per day, which is great. But in a case where you're also having, lower prices at the same time, that would, more or less even out the impact of, or more or less not increase our foreign reserves as much as we would like. But I think OPEC Plus, they've done a very good job at the moment. The World Bank also released a report by increasing, Nigeria's growth forecast for 2021, highlighting that, we faster than expected, faster than expected growth in commodity prices more or less supported, this. And obviously the fact that COVID, didn't really impact, the most sub-Saharan African countries the way it did in the western part of the world.
Well, even though we're seeing the vaccine rollout, but at a slower pace, and then we've also had some countries reporting rising cases. For instance, India.
Yes.
India is trying to deal with the rising cases of COVID-19.
Yes.
And of course, this week, the Reserve Bank of India will, of course, be meeting for their MPC. Looking at all of that, would that also be a consideration in the oil market?
Yes, definitely. As much as China is, when you're looking at the highest demand for oil, you're looking at China, but then you're also looking at India as well. India is still trying to fix up the economy. I think most people are with that impression that, once you get the first dose of the vaccine, everything is fine. And, a lot of people have been misunderstood when it comes to that. But they're literally drawing down on, I think they're supposed to impose new lockdowns within the economy to kind of, curb this growth in the number of cases within their country.
Well, we saw World Bank, like you mentioned, commodities, maybe the impacts of COVID-19 on commodities was not as much. That's why the IMF is reversible. What other factors do you think? I know the IMF did say that US and China will drive faster recovery, but back here in Nigeria, what factors do you think are going to help Nigeria that even made them to reverse this growth rate?
Yeah, so spending on infrastructure is one key thing, education. Currently, looking at Nigeria specifically, most of our challenges has to do with inflation rate, unemployment, which is currently at about 33%, which is not great. A lot of, new entrants into the job market. When you're looking at, the people that have left, universities for the past 5 years since President Buhari took over, you've seen that 80% of those new entrants or new individuals within the economy are unemployed, and that is more or less wasted resources within the economy. You're having challenges when it comes to the manufacturing sector as well, high cost environment. All of that is, more or less playing to our own recovery. As much as oil price is doing what it does best, the World Bank more or less highlighted specifically for sub-Saharan African countries, agricultural growth is important. We've done a lot when it comes to, boosting or other sources of, forex within the economy, but we still have a long way to go. And that also depends on, the direction of spending within the government, and also, the debt burden as well. The fact that, more or less revenues are tied, and it forms like a huge challenge within the economy.
Yeah, talking about the manufacturing sector, the FBN Quest PMI came in slower than it was, from 53 to 51, still above the 50 points. But what does that tell us about what to expect as regards the GDP?
Yes, so the PMI is definitely a leading indicator. It's more or less like what investors and other, economic analysts look at to what would point at the direction of growth within the economy. So definitely, if as much as, you know, the PMI released for March is still an expansion because it's above 50, it's still a contraction when you're looking at the previous month. And obviously that calls to question the situation of the economy, the high cost environment, like I mentioned, you know, high transportation costs, the fact that, you know, a lot of these manufacturing companies, I feel like their revenues are really squeezed and they've decided to contract some of their, you know, spending.
So how would all of these impact commodities prices?
So commodity prices, we do expect that commodity prices would or have already started increasing generally. I think 80% of our commodity prices on the list that we do look at has increased, and we do expect this to continue in that trajectory. We have Ramadan season coming, you know, as from next week. That should play into, you know, increasing commodity prices as well. We also have the fact that, you know, the foreign exchange has remained stable at 485. That hasn't, you know, showed any sign of improvement. And so when you have all of that playing into the situation, and also the planting season that we were seeing at the moment, that also has detrimental impact on our food reserves, which are already depleting.
So we saw cocoa price climb in Ondo and Delta State. What's driving this? Why? What do they have in common?
Oh yes, so it's not just Ondo, and it's more or less the Southwest region, which forms about 80% of, you know, our total Nigeria's total cocoa production. And what's played into this is the fact that, you know, we had little to no rainfall in the past few weeks. We've obviously, in the month of February till like the beginning of March, we saw an increase in rainfall, which had, you know, which was looking positive for the mid-crop harvest. But lately, we haven't seen any rainfall. And that has more or less affected the development of the cocoa trees and would more likely reduce the production of, you know, the mid-crop harvest.
All right, let's look at the price movement. Sofa, can you take us through that and their driving factors? And of course, what that would mean for inflation trajectory?
Yeah, so obviously, from what I mentioned, inflation is currently at about 17.3%. We do expect, you know, this to follow through because we haven't seen, you know, the CBN come to, you know, increase interest rates to, you know, taper this down, which is imminent. And so flour, the price of flour has increased to about 15,000 naira per 50 kg bag. We've seen the price of major staples like gari, you know, rice, they're more or less on that trajectory. Like I mentioned, with the Ramadan season, it's the types of food that would be consumed more during this period, and the increase in demand as well has also, you know, played an impact on the increase in prices of these goods. So in the medium, at least for the month of Ramadan, and the fact that planting season is still, you know, making the situation worse, we do expect that, you know, domestic commodity prices to remain, you know, significantly higher than what it was in the month of February and January.
All right, thank you very much, Boladu.
Thank you so much.
Thank you so much for having me.
All right, we'll take a moment. We'll be back. All right, let's look at the markets as they resume from the Easter holiday. Eddie, well, the markets went on holiday, particularly the equities market, of course, went on holiday, bearish mode. So are we hoping to see some bullish activities this week as they resume?
Well, Chimi, I hope we see some bullish sentiments. Hopefully, we'll see some people who just want to quickly take advantage of those lower prices. However, some market watchers feel like we're still going to see some volatility in the markets, at least for the short term. And they also expect investors to also take advantage of the low prices. So it's going to be a mixed bag. But just to get a sense of what we should be seeing or how the market has started trading today is Rotimi Fakaijo, a stockbroker. Good morning, Mr. Fakaijo. Thank you for joining us on the program.
Good morning, Lydian.
So what should we be expecting from the markets this week, and how has trading begun today?
Well, I think for this week, we may not see the kind of selling pressure that we saw as the month ended. And we know that when at the end of the month as such, we usually see a situation whereby investors and portfolio managers want to realize some profit. Now that that quarter is over, we are in a new quarter. I think it's going to be a different scenario altogether. Starting the day today, we're seeing the markets are moving slightly up. which is a very good sign that this week is going to be much better than what we saw last week. Presently, the market is trending at 0.03% positive, and it has traded a value of about 222 million naira. 222 million naira from a value of 28 million shares. I think with all of this, we are likely to see better things coming. Although the timeline for the submission of results for quoted companies was 31st March, only about 56 out of about 162 actually submitted their results. So there's still a lot still pending. And I think this definitely we take its toll on the market this week, even as more results pour in. So all in all, I believe investors should be very optimistic that the quarter is over and there's still a very good trajectory that the market can maintain. So I believe investors should just keep what they have, receiving the dividend and looking forward to a better year than year 2020.
All right, Mr. Fakaijo, I will be tapping into that optimism as well. Thank you for your input on the program. Enjoy the rest of the day. Rotimi Fakaijo is a stockbroker. But let's just quickly look through those numbers. The market was down 0.76% week on week at 38,916.74 points, while the equity cap was at 20.082 trillion naira. Now, we saw lower turnover, volume, value, and deals. Volume was down by about 6% last week at 1.44 billion naira. Value was lower by about 10% at 19.03 billion naira. All of that was traded in 17,400 deals. That could also be due to the fact that we had only 4 trading sessions last week. Now, out of the 4 trading sessions, 3 were negative, while 1 day was positive. The sectoral performance was mostly negative. We saw the banking sector down 1.54%. You saw declines from Access Bank. You saw declines from Stanbic Bank. Consumer goods was up 1.93%. Industrial goods was down 2.04%. We saw Dangote Cement down by about 4% last week, and I'm sure that had a huge effect on the market. Insurance was up while oil and gas was down. The unlisted securities market was positive last week, as we saw the NSI up 2.64% week on week, with the market cap at 592.61 billion naira. Volume, value, and deals were a bit higher compared to the previous week. Now, for the fixed income market, let's talk to Ramat Baba, the head or the chief dealer of fixed income at FBN Quest Merchant Bank. Good morning, Ramat. Thank you for joining us on the program.
Good morning, Lady Young.
So, investors are back from the holidays. What should we be expecting in the fixed income market this week?
This week on bonds, we're seeing yields trending higher. The 2035 bond, that's the 25-year bond, is currently trading at about 12.25 to 12.5% levels. Of course, it's just in reaction to the top rate at the NTD auctions last week, where we saw the 1-year paper stop at 8%, as against general expectations of 7.5% in the market.
So what about the treasury bills markets? What should we be seeing in that space? And are we expecting any inflows this week?
Yes, there are maturities this week, of course, more maturities. However, volumes maturing remain low, so we expect markets to still remain tight, and consequently, yields should also remain high. Of course, don't forget again, there is the MPC. There's the general expectation that towards the next MPC, yields might be going higher and all that, because the MPC might want to inch up rates slightly to compensate investors for their investment in Naira instruments.
All right, Ramat, thank you for your input on the program. Ramat Baba is the chief dealer of fixed income at FBN Quest Merchant Bank. Ochimi, with the yields in the bond market at 12-something%, I really don't know how investors are going to react to that. Hopefully, that doesn't affect sentiment in the equities market. I want to remain
optimistic, just like Rotimi did say. So we'll remain optimistic that, well, while investors in the fixed income market also are taking profit, investors in the equities market should as well take some profits there. Right. Okay, Dee, thank you. Well, we'll take a quick break, and then when we come back, we'll do an opening call to London. Just stay with us.
Welcome back, and now we head to London, where Juliana has been having a great Easter holiday. Juliana, good morning. Welcome back from the holiday.
Good morning, Annie. Thank you very much.
All right, so global markets are back in business after the Easter holiday. What does the first trading day look like on the streets of London, especially as the Prime Minister said that pubs, hairdressers, shops and gyms can now open from next week.
Well, it's good news. As expected after the Easter holiday, the FTSE All-Share has risen. It's up this morning, pretty much thanks to international travel-related stocks. They're all up, and this follows comments made by Prime Minister Boris Johnson yesterday that the roadmap is indeed still on. There were some concerns about that. So this time next week, as you said, we can go to the hairdressers, non-essential retail will be open, and hospitality. That's a very, very important. Also on the FTSE, lots of commodity stocks are on the rise, including BP and Rio Tinto, and that's because there appears to be some sentiment showing that a global post-pandemic recovery is indeed on track. That's thanks to the vaccination rollout, and the vaccination is on top of everybody's lips here in the UK. Lots of talks about a COVID certification or vaccine passports. The Minister for Vaccines has been speaking this morning, though they won't be a part of the rollout in April and May, but certainly when large gatherings of people are going to take place, that is on top of the agenda.
Meanwhile, Goldman Sachs is preparing for hundreds more staff to go back to its London office this week as it eyes a return to pre-pandemic working conditions. What more do we know about this?
Well, what we know is that the government's official announcement is still really that work from home if you can. But as we said, you know, Britain is overseeing one of the swiftest vaccination processes in the world. Lots of people, especially since the children have been going back to school, have been going back into the office. And there have been some umming and ahhing, some U-turns from some big corporate giants who were pretty much saying at the beginning of the year and the end of last year that they were happy with their staff working from home. Now they want them back. Goldman Sachs appears to be leading the way, although hundreds of their staff were still in the office during the pandemic because they are deemed as key workers if you're keeping the economy ticking as a banker. But we are expecting hundreds more to start going in today. And there is a big question about corporate property in the UK. HSBC, Lloyds Bank, they've all said they want to cut between 20 and 40% of their corporate retail space. But who knows? As the sun starts shining and people can start going for drinks after work again, which is pretty popular in the UK, people may start returning back to their desks.
So we surely look forward to that. Well, the Treasury Secretary, Janet Yellen, has said that has made a case for global minimum corporate tax rate. How is this being chewed in London?
Yeah, it's an interesting story. It doesn't appear to have been picked up by investors in the square mile, but it's an important story. Everyone's talking about it. And it comes on the eve of the International Monetary Fund and the World Bank's virtual spring meetings, which will be taking place throughout this week. And of course, the global post-pandemic recovery is on top of the agenda. America will be taking a key role in that. Again, this has also got a lot to do with that $2.3 trillion infrastructure a bill that Joe Biden, the president, is trying to put in front of the Senate. The only way he's going to be able to pay for this is if he gets the big corporate giants in America to basically pay their fair share and stop running off to countries that they will benefit from lower corporation tax. It's a massive story. On the surface, it should work if everybody around the world pays their fair share. But we know, of course, especially because of nationalism, that may not be the case, but it certainly sets the tone for these meetings that are going to be taking place throughout the week.
Thank you so much, Juliana. We wonder where that tone will lead to. Well, enjoy the rest of your day. And now we go over to the market that never sleeps, Laddie Williams.
And it's awake right now. The business is back on.
As usual.
Well, yeah. Well, the market cap, $1.98 trillion, up about 3.09%. 24-hour volume, $187.35 billion, up about 21%. Bitcoin dominance keeps slipping. We have 55.52% now. Yesterday was about 56.something%. So that shows that altcoins are really having a lot of room to play at this point. Price of Bitcoin, 58,933, up about 1.91%. 24-hour volume at 8 a.m. this morning, about $60.739 billion. And the king of the altcoins, Ethereum, hits about $2,151. That is a new high for Ethereum. At 8 a.m. now trading about $2,131, up about 4.60%. 24-hour volume, $29.386 billion. Let's talk to Olumide, additional financial market analyst. Hello, Olumide. Great to have you.
Yeah. Hello, Ladi. Good morning.
Good morning.
Thanks for having me once again.
Yeah. Total market cap hit $2 trillion for the first time. Ethereum hits a new high, $2,151. What does this mean for the market at this point?
Yeah, I think it's kind of exciting, taking into account that, the dominance level of Bitcoin is dropping to as low as 50%, and that's because we are seeing the likes of Ethereum and other altcoins gaining record high. Don't forget that about some hours ago, Mark Cuban, one of the founders, owners of a basketball franchise, recently disclosed his crypto holdings and exposing that he has about 30% of such assets in Ethereum. And Ethereum has a lot of utility functions. A lot of people use them for smart contracts. These are things that, that is already trending in the ecosystem. So right now we are seeing that the institutional investors too are getting attracted to these altcoins, and you can see XRP too getting to record high in this year, got as high as 0.89 before retreating, and we see other altcoins too gaining record highs too. So I think is a good one, showing that the spread, the bullish momentum is gaining spread across market spectrum.
All right, Olumide, most of these altcoins have had incredible movements. Like this is Chiliz. Now, this is a chart of Chiliz on TradingView. We see Chiliz was about 69 sats and rose up to about 1,400 sats. Now it's pulled back to 781 sats at this point, down about 38% from previous high. So, Olumide, I want to know, what is the best entry for this one now?
Yeah, this is a very good question. But if you look at, just like you said, it rose as high as 9.0 cents. But you see, the thing about Chiliz is that it had risen so fast. So at some point, investors took profit off the table. So for some weeks now, it has been consolidating around 0.45. So I think that position is a good entry. But one thing listeners need to understand is that a drop below that level means that it might find base at 0.4. But if it breaks above the 4.7, literally for a while, it means that the bullish run would rise. Don't forget that Chiliz is usually used for crypto in sports. That means you used to buy fan tokens. So most of these investors are usually hedging against fan tokens physically. So I think for me, a good entry will be from 0.40 to 0.45. So right now it's looking like a good buy. Yeah. Okay.
All right, Olumide, we'll keep tracking that Chiliz price. Anyway, thank you so much for the update.
Thank you so much.
Thank you. All right, there you have it. The alts are doing very well. BNB up by 11%. XRP still raging on, 89 cents, up by 26.31%. So the market looks good, Ini and Chimi. Good to play.
So now that we have the Bitcoin dominance coming down, and then, of course, altcoins doing very well, we're coming back from a holiday. What's your coin pick for the week?
Well, a risky question.
Well, for me, it's still ZRX and Chiliz at this point.
Well, I guess it's not a
financial trending baby now. Let's not forget. Ethereum is doing so good.
Oh, yes. But don't forget, you always buy the
dip. Okay,
exactly.
All right.
Well, this is not a financial advice. Well, that's it on the program. Thank you for watching. I'm Chimeze Obi Iwago.
And I'm Ini John Mekwa.
And I'm Ladi Williams. Thank you for watching.